Thinking about withdrawing from your 401k in California? The state tax alone could cost you more than you expect, especially if you're under 59 and a half. Let me break down exactly what you'll owe. California has some of the highest state income tax rates in the country, and 401k withdrawals are treated as regular income. But there's also an additional penalty if you withdraw early. Today, I'm showing you the real cost. Regular 401k withdrawals. If you're over 59 and a half and make a regular withdrawal, California treats that money as ordinary income. You'll pay California's income tax rates, which range from 1% to 13.3%, depending on your total income for the year. How the tax is calculated. The withdrawal gets added to all your other income, and then California taxes it at your marginal rate. So if you're already in the 9.3% bracket and withdraw $20,000, you'll owe $1,860 in California state tax on that withdrawal. Early withdrawal penalties. Here's where it gets expensive. If you're under 59 and a half, California hits you with an additional 2.5% penalty on top of the regular income tax. This is separate from the 10% federal early withdrawal penalty. Real example. Let's say you're 45 years old in the 9.3% tax bracket and withdraw $15,000 as early. You'd pay $1,195 in regular California income tax, plus $375 in the 2.5% early withdrawal penalty. That's $1,770 total to California alone, not counting federal taxes. Income bracket impact. Your total income determines your tax rate. California's brackets for 2024 range from 1% on the lowest income up to 13.3% for high earners. The 401k withdrawal could also push you into a higher bracket if it's large enough. Federal taxes still apply. Remember, you're also paying federal income tax and potentially the 10% federal early withdrawal penalty. Between federal and California taxes, you could lose 35 to 50% of your withdrawal to taxes and penalties. Exceptions to early withdrawal penalty. California does recognize some exceptions to the 2.5% penalty, like qualified disaster distributions or certain medical expenses. But these exceptions are limited and have specific requirements. Planning considerations. If you must withdraw early, consider the timing. If you're having a low-income year, the withdrawal might be taxed at a lower rate. Also, consider if you can wait until 59 and a half to avoid that extra 2.5% penalty. Withholding issues. Many 401k providers don't automatically withhold California state tax. You might need to make estimated tax payments or face underpayment penalties when you file your return. Roth 401k differences. If you have a Roth 401k, withdrawals of your contributions are tax-free, but earnings withdrawn early are subject to both income tax and the 2.5% penalty in California. California doesn't make 401k withdrawals cheap. Between regular income tax and early withdrawal penalties, you could pay 15 to 16% or more just to California, depending on your income level. 401k withdrawal rules can be complex, and individual situations vary. Always consult with a qualified tax professional before making withdrawal decisions that could have significant tax consequences. 401k withdrawals in California are expensive, especially early ones. If this helped you understand the real cost, hit like and subscribe for more retirement and tax planning insights.